So the Lakshmi Vilas Bank has been put under a moratorium by the Reserve Bank of India. We're going to tell you what this really means for the depositors. Now, Lakshmi Vilas Bank, you have to understand, is a small bank. The failure of this particular bank is not going to mean much for the overall banking sector. But what this signifies is that the loss of confidence in the banking sector at large. You had PMC earlier, you had Yes Bank earlier, and now you have Lakshmi Vilas Bank. Just imagine a situation or a scenario where a firm has a current account in the Lakshmi Vilas Bank. At this point of time, they've been told that you cannot withdraw more than 25,000 rupees. And imagine the firm has salaries to pay to all their employees. The world is already reeling from a COVID crisis, and beyond that, the firm cannot withdraw money from that particular bank to pay their salaries. This is the real hardship that is being caused to the depositors. We're going to assess this further and tell you what led to the failure of Lakshmi Vilas Bank in the first place and whether or not the depositors have any reason to worry. Bank failures are not unique or new to India. As I was saying earlier, you had PMC, you had Yes Bank, and now you have Lakshmi Vilas Bank as well. But what this really indicates is a loss in the banking and financial sector overall, and a loss in coming in from the depositor side, from the shareholder side, and overall in the banking sector at large in India as well. So what is exactly this crisis? Let us explain that to you. Lakshmi Vilas Bank has been put under moratorium by the RBI for 30 days, effective from 6 p.m. on 17th November till 16th of December 2020. The action has been taken by the Reserve Bank on the basis of subsection 2 of section 45 of the Banking Regulation Act 1949. Under this moratorium, the RBI has restricted the withdrawal to 25,000 rupees. The RBI has gone ahead and announced a draft scheme for the amalgamation of Lakshmi Vilas Bank with DBS, which is a Singapore-based bank. Question is, why did Lakshmi Vilas Bank fail in the first place? The depositors ought to know the answer. And here it is. The bank with 566 branches saw its capital adequacy ratio or CAR fall to 0.17% in June 2020 versus the minimum 9%. The bank had 13,827 crore rupees in outstanding loans and deposits worth 21,443 crore rupees at the end of the financial year 2020. Lakshmi Vilas Bank is now in an urgent need of capital infusion, that is money, because of the losses it has been incurring for the past 3 years that jumped from 585 crore rupees in FY18 to 836 crore rupees in FY20. The bank's gross non-performing assets have touched 25.39% in the same periods. There are depositors who are facing hardships. There are firms that are facing hardships. The ones who need to pay salaries to their employees are facing hardships, because what can one achieve in 25,000 rupees that you are allowed to withdraw in this particular period? The big question now is the money of the depositors even safe? And that is the big worry and panic that the depositors are feeling at the moment. The RBI has assured all the depositors that your money is safe and you can go back to withdrawing as much as you want after 16th of December. But until then, the moratorium stands and you can only withdraw 25,000 rupees. All the FDs, the fixed deposits that one has, that is the depositor's money in the FDs, is going to be safe as well, according to the Reserve Bank of India. Although after the amalgamation, the fixed deposit rates could go through a change because DBS will be calling the shots on this one. It is eventually the shareholders who will have to bear the brunt of this. That is the bank going down with the amalgamation with DBS, because they will have to face the flack of the share price going down after the amalgamation. Net-net, there is a palpable amount of danger with the banking sector, especially the public sector banks, which is away from what we're talking right now. But in case corrective measures are not taken, there is a huge financial crunch that the country could end up facing on the back of this banking crisis that we are facing in India. Many industry voices as well have brought this up time and again. Maybe a larger recapitalization plan coming in the union budget to come for public sector banks could help revive the ailing public sector banks in this country. As far as the private sector is concerned, the story is no different with the rising amount of NPAs as well. One has to just wait and watch on this one.